Hello, this is Jeff Gregg with Benefit and Risk Management Services. Thanks for joining us today. We're going to do a brief overview of BRMS as a TPA and also the Simple Funding program that we have. On the phone with us is Chad Bragonier, and he's going to go ahead and start the show.
Hi, so thank you all for joining us. We appreciate your time. So I'm Chad Bragonier, and again, we are Benefit and Risk Management Services. So we are a full-service boutique TPA located in Sacramento, California, and then we have an ancillary office over in Honolulu, Hawaii. A little bit of history about BRMS is we were established in 1993. We're privately held and managed, and we believe in being very technology-driven. So all of our systems are all in-house and proprietary systems, including our benefit and eligibility system, our claim system, ACA hours tracking, etc. So from there, this is our simple funded, level funded product that is out in the marketplace. That is an ACA alternative for groups that are looking for a level funded program for them to move on to. So what are the advantages of self-funding? What are some of the market insights? How Simple Funded got started, who makes up Simple Funding, and how it is a bundled solution is what we're going to talk about today. And what are the target groups that are good fits for this type of program? So let's go into the advantages of self-funding. Some of the groups that are interested in this type of product are coming from a fully insured environment, so they're a little bit wary and new to self-funding. So some of the key points that we find when talking to those type of customers is really them understanding how this could be an advantage to them. So plan design. We can customize their plan design to meet the employer's specific needs. A lot of the clients that we're bringing on, they actually like to mirror their currently fully insured plan design, which is something that we're capable of doing to minimize the disruption for their members. This solution's proven to be effective long-term cost savings for the employer groups. You do not have to prepay for coverage. They're providing the improved cash flow on the employer end. Plans are regulated under federal ERISA law versus state statutory laws. Self-funded plans are not subject to the 2 to 6% state health premium insurance premium tax that is applicable in some states throughout the nation. The ability to choose the best class and PPO networks, TPA, stop-loss, and PBM partners that we have partnered with to create this program. And then also reporting. One of the key components of this program is the ability to really give detailed reporting to these clients that most likely have never received it from their either fully insured carriers that they've been with or maybe the ASO type agreements that maybe are in place with them, so that they could really make better decisions in regards to their health plan and have a clear understanding of how the cost is going and how they can hopefully do some cost containment features if need be. So self-funding is definitely on the rise. 44% of U.S. employers covered under self-funded medical plans was in 1999. We've seen that growth tremendously. In 2015, there's 63% of employer groups that are now in a self-funded model. We believe the number of employees covered under a self-funded plan will continue to rise. That seems to be how the market is going, especially as fully insured premiums keep skyrocketing. So this is a quick study that we found interesting and useful when talking about this type of product. Of the 70% of employers that are fully insured, 40% would consider going self-funding. Saving money, obviously, is the biggest driver in the potential cost savings. 47% of benefits design changes, and 46% reduced premium taxes is what have been found when they move to a self-funded platform. They estimate that nearly 35,000 potential new self-funded employers will be in the market by 2020. So that's a huge number. It's definitely seeing how the market is going and the trend that we're all seeing. So what are some of the challenges? Obviously, the Affordable Care Act of 2010 changed the market as we know it and created some new rules and regulations for the employers to follow. They obviously now have to offer full-time employees or equivalent of the coverage that they need to. There's rising health care costs, double-digit premium increases with the carriers, increased instability in the fully insured marketplace. So what are some of the needs? The needs are alternative self-funded programs for employers that provide employer cost predictability, flexible plan design, quality network providers, and trusted insurance partners. That is really what this product does for those employers. It meets all of those needs. So this is kind of the overview of how we've created this product and the partners that are involved. So we do have Cigna PPO network on a national basis. We also have Anthem Blue Cross for certain states such as California, Georgia, New York, and Nevada. We use Welldyne as our preferred PBM. One of the key selling points that I have found with Welldyne and how they do it is they actually have their own in-house specialty division. So what that does, it allows additional cost savings to be done instead of a PBM outsourcing to another specialty vendor. They also have some unique programs that we can put in place to help mitigate the costs that are skyrocketing with specialty medications. Sun Life is one of our preferred stop-loss carriers. We have a unique agreement with them in this product to where if an employer group has 75 plus lives or more, they will actually do what they call shadow pricing. Shadow pricing is where they will look at the same carrier's past 3 years of rate history, so 2 years plus their renewal that's coming up, and they will actually back into those rates, and they will come in 2 to 3% underneath what their renewal rate is being quoted with the carrier. So that's a unique solution that is proprietary to this type of platform that we have. And then we also have a solution for voluntary benefits if that's something that, of the need of the client. So we do partner with a company called OneSource, and they can help place those type of products if that's a need that the client has. So this is the bundled solution that we have in place. So level funding. It's a turnkey bundled solution. Again, we offer flexible plan designs, EPO, PPO, HRA, HSA. It's a fixed monthly premium that is billed to the employer group. So all they see is a premium just like they would in a fully insured type market. And we send that out on a monthly basis. They then receive the invoice. They then pay us those level funded premiums. And then BRMS will do all the allocations to the appropriate parties, which would include network access fees, claims reserve, stop loss, etc. Another key selling point of this type of program, unlike what is out there with other level funded products, such as what you see with Cigna and Aetna, is that 100% of the employer reserves remain with the employer. So, for example, Cigna may take 40% if the group actually renews. Well, in this type of product, 100% actually belongs to that employer group when they have a good year. So that's a very unique component of our proprietary solution. There is specific advancement that is built into their stop-loss contracts. So what that allows us to do is if they do hit an aggregate on a monthly basis, then we can actually ask for advanced funding from the stop-loss carrier and then infuse the claims reserve so that the client's not having to come out of additional monies outside of their level funded premium. The services that are included from the BRMS team is the COBRA administration for the medical as well as other ancillary lines such as dental and vision, consolidated billing and reconciliation. We have telemedicine solutions. They get our reporting and data analytics and benchmarking tools, and our benefit and administration system is also available in a mobile type environment. This is our benefit and administration system. It's called VBAS, which stands for Virtual Benefit Administration System. This is what you're seeing here is the employer portal side. So the employer and whoever is within their HR staff that needs access will have the ability to go online and look at the employee benefits and coverage information as well as census. They can also do unique reporting such as, let's say, who is currently enrolled in what plan, what are the contributions associated with it. VBAS has the technology to show them all of that. This is the employee portal, so the employees can go online either throughout the year to make their status life event changes, or they can also utilize this technology to do the open enrollment. This technology does allow for payroll interface if that's something that the client is interested in, so we can definitely help assist with that so that there's one point of entry between the payroll system and VBAS. This is an overview of our VBAS mobile app. It is available with iPhone and Android ability. Members can log on. They can get their benefit ID card if that's something that they can't find or that maybe they've lost. They can look at their benefit summaries, which will show their plan outlines. They can submit FSA receipts if we do their FSA, etc. This is an overview of our data warehouse and analytical reporting. So again, clients and the producers can have access to this system. They can go online and they can run customizable reports that will show them high dollar claims analysis, trends of the health plan, in and out of network utilizations and savings analysis, trigger diagnosis, etc. We do find that some of the clients that are new to self-funding maybe don't want this technology, so we can assist with that. We can run the reports internally and then help walk them through the reports. So what are the target groups of this type of program? Fully insured accounts that are over 100 employees that have been with the same carrier for 2 to 3 years. Again, the carrier rates, if we do have those for the same carrier, then we can do the shadow pricing. If not, then we can also work with 3 years of claims data, etc., so that we can place them and get them the most competitive stop-loss carrier. If they're currently on a level-funded program and looking for another solution or ASO, again, 100% of the employer reserves will remain with the employer group, unlike some of the other level-funded programs. Groups over 200 and 250 lives where the carrier-paid claims data is available. Limited HMO population. Rich PPO plans with limited high deductible options. High employee population, greater than 50% is what's required from the stop-loss point of view. Stable and strong human resource department. That being said, some of the smaller employers don't have a dedicated HR staff. We can help assist with that and field questions from the employees if that's an issue to them as well. So what's needed to quote? And this is a document that Jeff and I are happy to send out if you are interested in this product so that you have it. Company information, effective date, census with zip codes, 3 years of carrier history if available, 3 years of rate history, renewal rates, employer contributions, plan summaries so that we can hopefully mirror the plans. And then if available, paid claims by plan year, large claims by plan year, assumed pulling point for groups with experience, and enrollment per plan year. You can submit claims to sales@simplefundinghealth.com, and we'd be happy to review that and push that along. So here's a sample of the advisory fee projection that is built into this type of program. So we do build in 3 to 5% of the the level funded premium in commissions to the producers in the marketplace. So that is built in. The nice thing about it, like I said, is it's actually based off of the entire level funded premium and not just the stop loss premiums that are being paid to the stop loss carrier. This is a Simple Funding Health website where you can go to and access if you want to look at additional information and resources that are available. Again, the site to go to is www.simplefundinghealth.com. And this is our network overview. So we do have a wide range of networks that are available to these groups. So BRMS, again, does have access to the Anthem JA network. The key to that is that the employer group needs to be domiciled either currently in California, Nevada, Georgia, or New York. Anthem does have a requirement of 100+ lives for them to actively quote on it. Cigna is available nationally. Cigna's life requirements are 25+ lives, so we find that to be a good fit for the groups that are 25 to 100+ lives. And then we do have a reference-based pricing if that is of interest in the market that you currently reside in. So we can definitely help with that. We've seen a lot of traction with moving towards a reference-based pricing solution. And then First Health is another network that we have access to where they have a life requirement of 15+ lives. Again, Jeff and I are the points of contact that you can reach. So our contact information is here. Again, I'm Chad Bragonier, and Jeffrey Gregg is my partner on this program. So again, here's our contact information. Feel free to contact us if you have any questions or would like any additional information. Definitely appreciate you guys' time. Yeah, thank you, Jeff.
So I would just want to highlight a couple things, kind of give you the Cliff Note version of what Chad covered very well in the last 10 minutes. For your clients that have just been concerned about getting into the self-funding world, have been a little scared and haven't wanted to leave their fully insured world, this really has the look and feel of being fully insured. So I think it's a great way to dip their toes in and kind of get into the market. Some of the advantages are the reserves remain with the employer. So some of the other programs that are out there with Cigna and Aetna, they keep 30 or 40% of those. So all these dollars remain with your clients. And I think it's a big deal to have some options that don't require medical questionnaires for a group of 75 or more, and actually in a captive model, even down to 50 lives. Having multiple networks available, Anthem, Blue Cross, Cigna is great. We find that works in most parts, if not all of the country. And if you have a good year, your clients get dollars back, and if they have a bad year, they know on day one that they will pay no more than X. So it gives them the comfort level of knowing that they can't really get hurt no matter what their claims are for the year. Again, I'm Jeff Gregg. My email is jeffrey.gregg@brmsonline.com.